For the avoidance of doubt, The Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place. Welcome to the simple side. Market beating.
All right, welcome back to the Simple Sides Saturday Send Out podcast. Of course, if you're one of the nearly 300,000 returning subscribers, welcome back. We're so glad to have all of you. As always, I want to remind you that you should be reading this newsletter along with the podcast. You can find it at thesimpleside.substack.com. You can go and subscribe for free there. We also have a paid version for those of you that want to check that out. As another reminder, we have a survey that sits in that newsletter. That survey is for you to fill out to tell me what you want to see updated on the newsletter. It could be anything from wanting to see a gold analysis to wanting to see sector returns. Both of these are things that people have asked for in the past. So go fill that survey out. Let me know what you want to see. So far, I've made over 12 updates thanks to recommendations. This includes a daily newsletter that I've made that sends daily updates on the market with fundamental and technical analysis on stocks. Of course, that only costs $1 a month or $10 a year, and you can join again by going to the newsletter, or you can find the daily newsletter at thesimplesidedaily.substack.com. So go and check all of that out. All right, as I do every week, I'm going to cover some of the subscriber requests that we got last week that I have decided to add or update things in the newsletter thanks to those requests. This week, a subscriber asked me, can I get sector trends that are usable to invest in the short and medium term? The answer to that is, of course. I'm going to be adding this in the markets and outlook section of the newsletter, and of course, same thing in the podcast. Another subscriber asked, where can I get the lifetime membership link again? I want to join. You can find the link here in the newsletter. Again, there are 3 spots left at the $1,000 price before we jump back to the original price of $2,000. So if you want to get in on that, I would get in now. Those 3 spots are going to go extremely, extremely fast. Again, you can find the link to that lifetime membership in the newsletter, and that's the only place you can find that link. All right, let's talk about what I've got in store for today's podcast. For our free content, we've got updates and developments on the newsletter. We've got our weekly trade performance. We've got market trends and outlook. We've got weekly politician trading, weekly insider trading, a gold report, our Buffett pick of the week summary, and then our portfolio updates. After that, we get into things that are for paying subscribers only, and this includes our weekly stock buy summary, mergers and acquisition stocks, top investment ideas, microcap stock picks, and earnings and options reports for the upcoming week. All right, let's start where we want here with the updates and developments. As you know, we are currently developing our copy trading system, and we already have over 5 people that we sent this to just to beta test. They're all on the platform and everything seems to be working well. So I'm going to be sending paying subscribers an email this week with a link to join our copy trading platform. If you're not a paying subscriber and you want to copy trade, you need to join paying as soon as possible. There are links spread out all over my newsletter with 20% off coupons. Or if you're on the lifetime membership, you also get access. So make sure you find one of those links and join. We're also developing a stock and ETF scanner. Like I said, this is in development and should be ready for testing next week. So be on the lookout for an email about that. We're also putting together educational newsletters, and these are going to be available next week as well. We're going to start sending one of these out a week. It's going to be talking about how to trade options for retirement, what certain metrics mean, how you should be analyzing stocks, and all that's going to be coming out next week for free and paying subscribers. Parts of those will be for paid, parts of those will be free. As another reminder, we're developing our website that tracks politician and insiders, and you can find a link to that website in the newsletter, or you can look it up by going to thesimpleside.news. Just type that into the browser, thesimpleside.news, and you can find that website. Here are the updates for this week. Our insider trading section has been updated and includes stats about the people that are making the trades, how their trades perform, what their average return is per trade, and all that good stuff. Another update on the lifetime subscription. There are 3 left at the 50% discount, and you can find that link in the newsletter. Again, thesimpleside.substack.com. We also have raffles coming up. In April, we're going to be giving away $2,000 again. So be on the lookout for an email about that. If you're a paying subscriber, you're automatically entered into the raffle. So join paid now to get access to that as well. All right, let's talk about our weekly trade performance. We invested $10,000 in these weekly trades 34 weeks ago, and since then, we've returned 26.92%. Over the same period of time, the SPY has only managed to return 3.79%, which is an outperformance of over 23%. Annualized, we're predicted to return 41.17%, while the SPY is predicted to only return 5.80%. And you can go and see how those stocks have performed over this past week by looking at some of the graphics we have in the newsletter right at the very beginning. So go and check that out. All right, we're finally going to start talking about the market here. So let's get into everything. Currently, the total market cap of the stock market is $61.38 trillion, with technology making up the biggest portion of that at 28.54%, followed closely by finance at 14.46%. Currently, the year-to-date projected market returns for the S&P 500 are 1%, which is a slight increase from last week, which was 0.7%. And this week in the markets, we saw 3,606 stocks with gains, 5,875 stocks with losses. The median return this week was negative 1.39%. The top 3 performing sectors this past week were energy, utilities, and basic materials, with energy up 1.88%, utilities up 1.07%, and basic materials up 0.91%. The bottom 3 performers are communication services, down 2.89%, consumer defensive, down 3.57%, and consumer cyclical, 4.22% down. And I wanted to make a quote here, or I wanted to quote somebody here, Manish Prabhai, who's the quoted Warren Buffett of India, believes that investing in what is hated and unloved is the best road to success. So if you agree with that contrarian mindset, and you're looking for sectors that are currently hated, look at the following sectors. These have underperformed the market year to date and are underperforming the market over the past month. Industrials, communication services, healthcare, consumer cyclical, and technology. All of these are underperforming the market right now and could flip and start to outperform the market over the next week or shorter or mid-term time periods. My general commentary on the market is that it doesn't show any signs of slowing its descent into oblivion. Well, maybe not oblivion. And that's exactly what we said last week, and it has proven to be true. Trump's tariff war has begun to become, I don't know if that makes sense, has begun and is an ongoing issue. Though I do believe in the long term it's going to be a big nothing burger, it will likely pan out to be beneficial for the country. It'll give us sort of bargaining power with our allies and enemies alike in the future if he's able to get some of these tariffs implemented. I could see conversations like reduce our debt, or we won't reduce these tariffs, something like that coming in the near future. So I'll be on the lookout for stuff like that. I also want to point out that the only stock from the fabled FANG, F-A-A-N-G, that has managed to post gains year to date has been Meta with a mild 3.87% return. We luckily structured our main portfolio, the flagship fund, to remain somewhat independent of the market by adding ZROZ earlier this year, which is of course a bond ETF. This move has proved beneficial, and we expect it to continue to be so as the market continues its downward trend and people shift assets further into bonds. If we happen to see the Fed show hawkish sentiment and rates drop this week, bond prices could rally and benefit our portfolio further. I'm going to continue to DCA into the portfolios as time goes on. I also want to mention that I think the road to recovery is not currently in sight. If the market rebounds, it will likely be a short-term boost before another and larger drop. All right, let's talk politician trading. For those of you that don't know, politician trading matters a lot. Politicians in 2024, the top two returned 104% and 70.9% just in a year's time. And we track two ETFs for politician trading, Nance, which is up 0.53% on the week, down 10.5% on the month, and down 5.6% year to date. Cruise, which is a Republican ETF, is down 0.36% on the week, down 7.89% on the month, and down 4.12% year to date. For comparison, the SPY is down 4.63% year to date. Over the past 30 days, we watched 23 politicians make over 600 trades in the market with a total volume of $27.22 million moved. The current buy-sell ratio is now 4.4, which shows bullish sentiment from politicians. This is the highest number that we have seen from politicians in 5 years. They are huge buyers in the market right now, which is very surprising given the current trend of the market. Now let's talk about insiders. We track another ETF for insiders. This ticker is SURE, or what I refer to as SURE. That is up 0.81% over the past week, down 9.18% over the past month, and down 7% year to date. The monthly buy-sell ratio for insiders is up to 0.29, which is higher than last week's 0.24, but is below the median of 0.28. And this indicates a slightly bearish sentiment from insiders. Now in the newsletter, I've got a picture here that shows the 5 largest trades from the past week. You can go and check that out. But I want to highlight 2 of the buyers in the market and their current returns that we've seen from their buying. We've got Molly H. Carter here, whose average return per transaction is 0.17%. They outperformed 50% of their trades and bought ticker symbol FSUN, which is 2.46% of their current portfolio. And over the past 5 years, they've made 1 buy and 1 sell of the stock. Another buyer this week was John F. Barry, whose average return per transaction is 1.49%. 48% of his transactions are outperforming, and that is on 198 trades. The ticker that he bought this week was PSEC. It is 100% of his portfolio, and over the past 5 years, he's had 31 buys and 0 sells of the stock. All right, let's talk about gold trading. We give a bit of a technical analysis here, and we talk about how gold has pierced the 3,000 threshold. We also give a bit of a fundamental analysis talking about the tariff concerns that Trump has threatened, and we talk about a few scenarios and strategies that you could use to trade gold over the next week. So if you want to see any of that, go and check out the gold tracker in the newsletter, thesimpleside.substack.com, to look at that. The other thing we've got for you here is the Buffett Buy Weekly Summary. Every week we analyze a stock on 5 key metrics that Buffett analyzed stocks on, and then make a statement about whether or not we believe Buffett would buy the stock. Sometimes these stocks make it into our portfolio, and the stock that we analyzed last week, I think, is going to be making it into the portfolio. It's an insurance company, and Buffett made a fortune investing in Geico, so we like this stock quite a bit. So you can go and read that summary in this week's newsletter. As you know, we've also got portfolio updates coming up in the newsletter and a bunch of other things for paying subscribers, including our buys for this week, our expected returns, and all that good stuff. So go and check all of that out. Again, please go fill out that survey that we have. Let us know what you would like to see added, changed, subtracted, and I will be seeing you all next week. Have an incredible weekend. Thank you so much for bringing us close to 300,000 subscribers. I will talk to you all again next weekend.